Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Good morning to you, or good evening, obviously, depending on where you're watching this or when you're watching this. But I do want to thank you very much for jumping on over here too, and a quick congrats to our premium members here for a nice, healthy 65% from ID. Yes, we took a stop loss at 82% for Solana. That was a short, but we did take some nice offsetting trades there with ICP longs. Those are two separate trades at 82 and 57, and also a nice Gala long too at 105. So again, it all equals out at the end. You're going to take some losses, but the key is to take less losses and more gains, right? So that's just kind of the whole practice there. So you want to be part of that, of course. Crypto Cash Premium is the option essentially. CryptoCash.tech is a link down below. We are having reserved, or more importantly, I guess a better way to describe it, we're having less potential members here moving forward. So if you do consider jumping on over there, sooner the better, of course, just based on the simple fact that we're going to start restricting the amount of users just to ensure we all have a good one-on-one with my members. So heads up on that. All right, so Bitcoin, what's going on here? Well, we're going to take a look at some back-end data, understand what's going on exactly. Also going to discuss kind of a stark reality here in the fact that we are extremely high in the RSI, and the likelihood of the price action breaking up is still high, but also we need to recognize we could see some turbulence this week with the Fed meeting. So just kind of quick heads up, Fed meeting is this Wednesday, November 1st. It's essentially typically going to be televised around 2:30 p.m. Eastern Standard Time, but the results come out at 2 o'clock. So it's interesting to watch that. Again, it's 2 p.m. Eastern Standard Time, so just be mindful that is on the horizon here in 2 more trading days. I recommend not trading into that just to be on the safe side. But once more, depending on how your swing trades are set up, if they are swing trades, of course, you can survive those kind of fluctuations, which is how we design our trades too. So again, just kind of something to think about. That being said, daily time frame. What are we looking at here? Well, why don't we take a look first of all at the monthly and just recognize it's been a monstrous month. Okay, so first of all, doing very good on the monthly here. There's really no reason to expect anything to be, I guess, adverse or negative because we have this strong support at 26,800. Both the 50 and the 20-day SMA are hanging out there. We've got the RSI up over 50, and the MACD is starting to swing upwards. Okay, so we really got all bullish signs on the monthly. So there's nothing here that's really disadvantageous. Taking a look at the weekly, we can see a very similar scenario here as well. Both moving averages, including the 20 and the 200, are at 28,800. So 28.8, I've talked about this previously, is a nice strong support level because once again, 20,500 held as a resistance, and once it came through that level, it hasn't looked back. Okay. The truth is, though, we are overextended here on the weekly RSI. Okay. So the truth is, when we kind of look at its history, it doesn't stop when it hits 70, but it has a tendency of pulling back in a lot of cases. In other words, recently, of course, this is the time in which we hit almost 70,000. The price pulled back, and we haven't seen anything over 70 yet on the RSI. Previous bull runs, the price goes above 70 and never looks back, never stops. Okay. So again, it really depends on how you look at it. I'm not really super convinced with the RSI being at 70 that we're at the top. There's no doubt that it probably should continue higher because we're, again, looking bullish on most every other situation there. Okay, so again, looking very, very good here on the overall big picture. It's converging strongly on the MACD2 on the weekly. So really everything looks pretty strong here so far with this coin. A couple things to note too. This is just actually some big picture stuff here as well with CME. This is my CME chart. We don't have any significant gaps. I mean, we do have somewhat of a gap here that could get filled, but it kind of already did. The key takeaway here is that since we filled our previous CME gap here at about 35,200 was the top, we've seen the price action kind of stay in that range. Now, if the price does end up working into this type of rising wedge pattern, there is a decent chance we could see the price break down. Okay, so just be mindful that that's a possibility. Is it a probability going into November being the strongest month of the year on average? Probably not. Okay, my speculation is we're going to see some sideways action, some range-bound activity between 30 and 35,000. If we break 35K, then we're going to have a different conversation. Okay, so just some things to kind of think about there. All right, so taking a look at the daily here on the wonderful Bitcoin chart here. We're taking a look here. We can see the MACD is starting to lose its momentum. So just keep in mind, unless we leg up here soon, we're going to start to see somewhat of a divergence. There's a possibility of that. We are ascending positively. We can see this ascending trend working concurrent with the 20-day simple moving average. While it's not exactly aligned, it is pretty much the same direction. Okay? So again, staying above the 20, I think, is an important thing for us to be able to maintain this continuation. If we lose that, again, we could see the price pull back. We also want to talk a little bit about the moving averages. You know what? Hold on. Let's go ahead and jump over to High Block Capital. Look at some liquidation levels first. Because again, when it comes to these things here, it's important to recognize there is some stark realities. So we can kind of see here a lot of liquidations right at about 35,900. Okay, so 36,000 is a rough estimate of how high the price action needs to get in order to have a massive short squeeze. So don't think that we have tons of liquidation at the 35,000 range. It's between 35.5 and 36. Okay, we'll talk about that here in just a little bit, but generally speaking, we can see there's a lot less liquidations occurring right now. Of course, the price is range bound, and we can also see that the fear and greed index is extremely high. In other words, a lot of greed right now. People are buying, they're not selling. And we haven't seen this in a while, but it is nice to have this for a change. The last time we were in the green, so to speak, was July. So it's nice to kind of see this here. Okay. Regardless of that fact, let's take a look here. This is the more important stuff. So open interest, take a look at see where the most amount of longs are alleged or hedged, so to speak. We got some longs at 34,800. So those are kind of some late longs here. They're not in the green just yet, but for the most part, longs are pretty heavy at this range right now. Okay. We also want to look at a couple of things here too with the shorts, net shorts. We're looking at here as well. Equal amount of shorts. In fact, we got some early to mid shorts at 34,600. Okay. So it's interesting right now with this level, the way things are, we can see that the price action is essentially pretty strong concentration between 34,600 and 34,800. Furthermore, too, taking a look here at the last 7 days of trading, we can see they're starting to get a larger accumulation of volume at higher price points. In other words, 35,250 is a decently sized amount of liquidation. In other words, the price will accept to that level, shorts will get hit pretty hard. And we could very well see the price shoot up a little bit after that if we do break that plane. There is some liquidity too we're going to talk about here on the 4-hour time frame in that range. That is important to recognize, because that liquidity sweep is a very, very normal thing. Okay? So just keep in mind there's a good chance we could very well see that happen. So furthermore, last thing to note too, we have a lot of leverage or correction. Actually, it is leverage, of course. A lot of liquidation at the level of 30,700. Okay? So the price does come all the way down to 30,000-ish. We're going to see a decent amount of longs get smashed right there. Okay? So just some kind of things to kind of think about. All right, so talking about this guy here, liquidation levels or liquidity, so to speak, at these upper levels. Okay, so we got a lower liquidity level here that needs to be filled, and an upper one that needs to be filled as well. It mostly got filled here recently, so keep in mind we may not see a massive sweep up there, but if the price does continue to break this plane here at about 34.9, we'll absolutely be able to see 35.2 and possibly a little bit higher hit. Okay, and the reason why this happens is just because the price action shoots up. There's a lot of price action here at this level that hasn't been cashed out yet, and they sweep that upper level there to go ahead and blast out any of the shorts that are hedged right here previously, and then it typically pushes the price action higher. If this level holds, then that's a good sign. Then we should experience the price to pull back. At least it's a good sign for those holding the shorts. But once more, it all depends on the amount of volume that we see coming into this coin. If we take a look at larger picture, there's a pretty solid amount of volume. In fact, if we just kind of zoom in a little bit, we can see probably the most amount of volume is right there at about 34,100 in the last, that is roughly the last 7 days. Okay, so in the last 7 days of trading, we can see a significant amount of volume at 34,000. So 34,000 is potentially a new support level. Okay? And that's a good sign here, kind of letting us know that there's more likelihood of further upside than downside at this point. Okay, so let's go ahead and summarize here. On the 4-hour, MACD is trying to converge but hasn't yet, but we're losing that bearish momentum. We can see we're above 50, below 70 in the RSI. That's truly a bullish sign as well. Money flow index is increasing as well. You can kind of see this here where the MFI is coming up. That tells us that with more money flowing into the coin here in the last 7 4-hour candles, or sorry, last 14 4-hour candles, we can see the price action essentially increasing. So if you take all these things and kind of combine them together, with us moving above this moving average here as well on the volume, I'm speculating we're going to see the price action at about 35,000 retested. So whether or not you want to consider a short at 35, 36,000 is up to you. I'd be careful doing so, but if you do, make sure you essentially use low leverage, low position size, because this is kind of somewhat one of those like make or break levels. Okay? The price will either blast through 35,000 or it's going to retest that and come back down. But once more, all this volume here kind of leads me to believe that we're going to see the price action continue to increase. Take a look at the hourly. Last thing we want to kind of look at here on the hourly would be the wonderful Ichimoku cloud. And with us being fairly range bound, it's not 100% accurate, but it does tell us here that we should have closed our long position by now because we are starting to intersect with the price action there. Conversion line is at the baseline, and the price action is soon to be within the cloud if it pulls back just a little bit. Okay, so there's only really 1 out of 3 indicators here letting us know that a long position might be viable. With the Fed meeting coming up here in a couple of days and potential increase in inflation, there's a good chance that we could see the price action pull back. Keep in mind too, this could be the price getting baked in here as well. And once the news comes in, the reality starts to come in and we start to see the price pull back and correct itself to fill this massive gap here. Okay, so again, there's a lot of value left on the plate here. I'm not going to rule out the fact that the price action could and should pull back, but there's a lot of momentum and a lot of reasons why it shouldn't too. Okay, so take that with a grain of salt. Take it however you will. But truth is, it's hard to specify specifically which direction it's going to go. It would make more sense for the price to go up sooner than later, but it also makes a ton of sense for the price to pull back too, to sweep that lower liquidity and those fair value gaps and the 31 to 32,000 range. Okay, so again, that's kind of where we're at here for the moment. I hope this made sense and I described this correctly. If you can, help us grow our Twitter, Telegram, and Discord communities. Links down below for that. Obviously, if you want to become a better trader, cryptocash.tech, jump on over to some of our trades that I share. Basically, I share all of my trades with you, and we do average roughly 1 to 2 signals per day. A week like this, we might average a little less because sometimes I don't like trading into Fed meetings like this, but it really just depends on overextensions and where coins are at right now too. A lot of reasons to consider. Again, low leverage, low position sizing, at least when you have a lot of interesting fundamental data coming up in the near future. All right, some friendly advice there. Thanks again so much for watching. Hope you have a great rest of your day. I'll see you in the next one. Take care.